but we worked so hard for this moment, and we are resilient. We did it. We got into our dream.
All right. Let's see if I can get the link over to Twitter. See if I can figure this out.
So proud of us, class of 2020. We got this.
Some people deliver packages, others deliver dinner. At Williams, we deliver natural gas that's safe, clean, and affordable. Have for over 100 years. That's how we fuel the clean energy future. Williams, we make clean energy happen.
Need better sleep? Try Nature's Bounty Sleep 3, a unique tri-layer supplement that calms you, helps you fall asleep faster, and stay asleep longer. Great sleep comes naturally with Sleep 3, only from Nature's
This
Bounty.
link.
To all the media prayer dads, don't tell mom dads, and take one for the team dads. Happy Dad's Day from your friends at Duluth.
It started in 1898, helping clients and communities invest in hospitals and schools, roads and bridges, farmland and forests, small and large businesses, and sustainable cities around the globe. It continues today, more than 120 years later, investing to make an enduring impact on our world.
The opening bell is brought to you by New Being, a leader in income, alternatives, and responsible investing.
All right, welcome back. Time for a Mad Dash as we get ready for the opening bell 4 minutes from now. The letter X.
Yeah, we're trying to get live. Get the link out to you guys. Hopefully in the next 4 minutes. So just chill for a second.
Than U.S. Steel. Yes, my in-law said that, and you know what? Everybody's bigger than U.S. Steel now. It's no longer good comparison. 50 million shares being offered. Looks like it's coming between 8 and 8.5. They say they need it in order to be able to complete an acquisition. They also say it's the trough. Now here's a deal, and people say it's a bubble. What did that? Thank you, Sarah, just said me that it's a real McCoy bubble. Well, I'm not going to encourage people to be in this because I don't think U.S. Steel is doing very well. But this may be part of what can get done during a J. Powell inflated era. This is common stock. Obviously, there are 10 common stock deals today in order to be able to help liquidity of companies, and this is one of them. U.S. Steel has been a terrible investment for several years, and this time you get an even bigger chunk and hope it goes up. You hope you buy high. I mean, high meaning this stock was actually low not that long ago, and sell higher. So anyway, there's that 50 million shares coming at you.
Yeah. That's a big number as a percentage of the overall market value of the company, Jim. And we're talking $429 million for what was a $1.6 billion market cap prior to the fall that we're going to see this morning.
Yeah, well, I mean, if you want to own a steel company, why not own Nucor with a 3% yield, the best steel in the world? A company that makes money consistently. It has been, will be fabulous if we get an infrastructure bill. So if you like U.S. Steel, I think you'll love Nucor. Had Hyman Law, right, just they were bigger than Nucor.
Yeah, Jeff Bezos could buy U.S. Steel about 140 times over.
No one's bigger than well, Apple. You can sit around and play like Monopoly. You wait on Apple, and it's like one of the green properties. But that's what
I know. We only played Monopoly once during this entire pandemic. I thought we'd be playing more. I really did.
Yeah, that's what people do. And they sing songs.
Yeah.
Siri playing John Denver, Rocky Mountain High.
They actually, if they're teenagers, they just look at TikTok all day long. You don't have teenagers anymore. Well, at least teenage girls. They just TikTok all day long.
Is that what they do?
Dance moves.
We do that
That's
stuff.
what they do. You and I can do a TikTok together with our dance moves.
I'm happy to do a TikTok. To me, TikTok's the most important thing right now in the world. It's controlled by everybody. Is it the PRC?
Well, they fight dance, although they also essentially thinking about they can't get out of China. And remember, they got a new CEO.
Cool. So there's the opening bell. I don't know if you can hear that in the background. Wait to see if people can join.
When TikTok comes public, we're going to be spending a lot of time talking about it.
Oh, okay.
Companies out there almost immediately.
Got some people joining.
The opening bells, everybody, of course.
Looks like the market's going to be down at the start. This isn't really a discussion about markets, but I do watch it and follow it pretty closely. So welcome. This live chat or live stream came as I was getting tons of requests from people to be their mentor, and I know how important mentorship is. I've had some awesome mentors in my own life to get me where I am today. I'm certainly not where I want to be, but it's kind of a work in progress. Welcome. Good to see you guys. Got my coffee and I'm ready to go. I think today we're going to cover a few things. But again, topics, feel free to ask me any questions. I'm going to try to hit things that I'm interested in, things that I'm working on now, things I'm upset about. And hopefully my experience will be useful to you in a number of ways. It's probably going to be only about 20, 30 minutes. We may ramble on longer if we feel so compelled. But anyway, I hope you guys are doing well out there, and I'm excited to get started. So I'm going to spend the majority of today talking about real estate. I've been getting lots and lots of comments from people about kind of how to play the real estate game. I've given some advice regarding how I approach real estate. Real estate's been a super big part of my wealth creation personally, and it's a big part of my portfolio. And I'm going to go back 20 years. I'm 25 years old, and I've just finished. Not finished, but I've gotten most of my academics out of the way. I'm already a licensed healthcare provider. I just dropped out of Yale, out of my surgical residency, and I had met a physician. He was one of my professors in my undergraduate and graduate training. He was an emergency room physician, and we decided to partner up. And in this real estate game, it's capital intensive, especially when you start off, because most people use leverage to pull off real estate investing. And it's one of the spots, from my perspective, that I actually like to use leverage. I don't like debt. I don't like credit cards. But to get started in a real estate game, leverage sometimes is important. Being 25 years old and not having a lot of assets other than kind of the debt I accumulated from getting my education, which was an investment and useful. We can talk about education at another time in regards to, its usefulness in regards to ROI. But, I met this fella, emergency room physician, and I was able to leverage his balance sheet. He was like 60 years old. And we were able to go to the bank and buy our first property, which was used for the urgent care thesis that you may have heard me talk about prior to this talk today. So go to a bank and buy a post office in a city center. And that piece of property I still own today. So fast forward 20 years, I still own that piece of property. I don't own the practice that's in there, but it's been continually occupied by primary care or urgent care services. And I've collected rent on that property for 20 years. It was paid off probably 5 years or so ago. And so for someone being 25 years old, not having a lot of assets, more debt than real wealth creation, partnering is a really good way to get in the real estate game. I would suggest creating a limited liability company or an LLC, super cheap to do, put an operating agreement in place for the property, and make sure that you structure things in such a way that you kind of begin with the end in mind. I think it's a really, really important kind of philosophy in business, but also in this real estate game. You want to make sure that you work out all the ways to unwind the business right up front, because unless you're flipping properties, which I'm not a big fan of, you want to be able to project out 5, 10, 15, 20 years down the road. And what happens? Partnerships change, people die. In this case, my partner's passed away. I had one partner, that physician that I told you about, and we have an LLC together. I was the sole owner. He was the sole owner. When he passed away, that 50-50% partnership and decision-making went away to now I'm 100% in control of that LLC and make the decisions around the operations of it. His estate is still entitled to 50% ownership in the project, but a plan allowed me to continue to hold the property, manage the property, realize it as an asset, and structure it going forward. So I don't mean to jump too much into the weeds on that particular project, but I think it sets the tone for a broader kind of philosophy that I have personally, and that philosophy is around optimizing for control. And that may sound super aggressive, but I'd like to kind of explore that with you guys today. So let's see who I got. Larcy, good to see you. Kay Torres, what's up? Jake, this is going to be epic. I hope so. Joseph, good morning. Eric, nice subliminal dunks advertising. Yeah, I've got a bunch of like not advertising here. We got PSG, not a fan. I don't even know where I got this. Manchester United fan. I've got Auto Arts. It's awesome custom shop if you're looking to do cool stuff with cars, and Dunks Coffee. Nobody's paying me. We've got no sponsors. Anything that I shill on this podcast or live stream, I'll tell you beforehand. I'm either an investor, I use it, or I don't use it. So hopefully that's authentic and comes through. Super Mario, what's up? Get money, get paid. I love it. So look, if you have any questions along the way, you hit me with it. So just riffing on this theme of around optimizing for control, I think it's really important. Again, 20 years ago, bought my first property and structured it like a real business, operated it like a real business. And so today I still own that property and can still operate it like an annuity or a cash flow business. We used leverage to buy it, and that project continues to pay me every month, and that's a good thing. I think it's really important to approach real estate because I'm not a real estate flipper. I would call myself more of a real estate collector. And the real estate collection that I have today is really based on like core real estate or core plus real estate. And it started just after I did that post office that I talked to you about in my own personal residence. So I don't look at homes as an investment. I don't look at second homes as an investment. I look at homes almost like I look at a car. It's kind of comes out of necessity, and as you want different things as you get older or have a family or whatever your kind of dreams or aspirations are, you may want to buy a house. if you always remember to optimize for control, hopefully you'll start to ask yourself questions around, like, does buying a house give me more or less freedom? Does it put me more or less in debt? Is this an investment, or am I doing this out of necessity? When I put out to the world that I didn't think buying a house was a good investment, people kind of challenged that. And I started to look into options that you have when you buy a house. So I threw out recently in a tweet, you can, if you live in a house for 2 years and you're single and that house appreciates, you can actually capture up to $250,000 of arbitrage on the exit of that house without paying any capital gains on it, which is a cool strategy. And you can actually repeat that every 2 years. So if you literally bought a house, used leverage, the house appreciated somewhat, within 90 days of you selling it, you do some repairs, you can capture those repairs, and you can claim the profit above your exposure to the debt, and you can do it tax-free. If you're married, you can capture up to $500,000 of upside. You can do that every 2 years. So again, I don't like to flip properties, but if you wanted to get in the real estate game and your house was the first kind of adventure into that, that would be kind of cool. And it's a strategy you can use. Back to kind of collecting properties. This core and core plus thesis is just, it's pretty conservative. I define kind of core real estate as these kind of fundamental industrial properties, like grocery store anchored retail. And if you can find those, they usually are pretty good. They cash flow. Even with leverage, you should be making somewhere between 8 and 10%. That's maybe a little aggressive for core. Core plus starts to hit in that kind of 10, 12%. And the nuance between core and core plus really has to do with maybe a core plus property is a little impaired. It's not been optimized in terms of its rent. You may be able to get a better tenant in. It may need some capital improvements. You're still using some amount of leverage on the property. I don't think I own any investment properties 100% myself. I'm trying to search my mind right now. I probably have 20, 30 different investment properties. They're all with like Uncle Joe, Pomp, some combination of friends, business partners. And again, it just takes some of the burden off of dealing with the equity portion that you have to put down to use this leverage thesis. But if it's high quality real estate, you can deploy this strategy pretty well and capture pretty good gains. I mean, when you think about making 8 to 10% on your money, that may not be exciting to people, but I approach this game in a just generic or kind of regular asset allocation plan where you're playing Monopoly, right? You're buying properties, you may buy some commodities, you might buy some stocks and bonds, but you've got a bit of diversification. To get real wealth, you've got to focus those investments and you got to make the right decisions. So, all right, let me stop for a second and check out some comments that you guys might have. Just hold on one second. I'm just listening to this is what I normally do when I work. I listen to CNBC in the background. So very cool. Let's see. Yeah, someone just asked me, hey, Veer, do you set up an LLC per property? Do you have multiple properties within a single LLC? Yeah, the strategy that we use is we set up single LLCs or multiple LLCs for each property. So one LLC per property. I'm not a tax lawyer. I don't have a real estate license. I'm literally just telling you what I do. It's a little frustrating from a tax perspective. because you have to file for each of these companies. So you've got to make sure you put a lot of pressure on your accountants to not take advantage of that strategy. But you're doing it for a number of reasons. You're creating legal firewalls in case there's an issue at one property, or you aren't able to meet your debt obligation. You may be able to silo a situation at the LLC. Let's see, how important is the 30-year fixed rate? This is actually pretty cool, and I'll deviate for a second into another thing I'm working on. So I'm trying to buy a second home right now, and I went to the market about 4 weeks ago, and lo and behold, everyone on the planet's trying to buy real estate right now, which I wouldn't have thought is actually going on, would be going on with the kind of economic stress we're under, the pandemic, all the riots, what have you. But it does appear that the real estate market in certain areas of the country is super hot. So I went to the market a month ago trying to buy a second home, and properties that have been on the market for 300-400 days are competitive. You're paying nearly full price. A strategy I use to buy properties, and I use the same strategy with the second home purchase. I haven't completed it because it's a little hairy, and we'll get into that another time. But I went to a local bank. So I have a bank that I've used for 20 years to do, the majority of what I do. But when I'm buying strategic properties that aren't in the area where I live, I like to use local banks to do the purchase. They know the properties pretty well, and they're usually offering good deals. And for example, on this second home, my bank that I've banked hundreds of millions of dollars of deals with, they wouldn't offer me a 30-year fixed mortgage on a second home. They offered me a 5, 7, and 10-year ARM, and those rates were north of 3.25%. When I went to a local bank in the area I was looking to buy the second home, they offered me the 5, 7, and 10-year ARM, but they also offered me a 30-year fixed mortgage at 2.85%. So look, you can buy it outright, use cash. You can use leverage. You can use a more aggressive leverage strategy in one of these ARM products. I prefer the 30-year fixed. There you gain or capture some efficiency in terms of interest rates if you don't use a jumbo mortgage. If it stays below $510,000, which I think is the limit, you can get pretty good rates locked for 30 years. Let's see. I've already talked about core real estate. Any calculations? Hold on one second. Let's see. Any calculations on what would happen if you invest the money you pay in interest versus the money you pull? Look, I love that. And that's why that question is actually a very, very good question. You can run scenarios around core real estate and core plus real estate, your home. Let's just talk about home. If you buy a home and use a traditional mortgage versus investing that money in other projects, I think that's what you're asking me. That's why I don't feel like a home is a great investment. This property, the second home I'm buying right now, the seller paid $100,000 less than what I'm buying it for 10 years later. So they bought it 10 years ago. I'm paying $100,000 more. I don't think that's a great investment that they made. They got to make great memories probably. And, that's not the kind of returns I'm after. Let's see. Oh, Jason, do you prefer fix and flip? No, I don't do any flipping of real estate. I'm a real estate collector, I would say. So, all right. Let me stop here. This is a lot of fun going over. Let me hit Bitcoin real quick before I leave. Bitcoin's kind of been doing a lot of nothing. Yeah, it's still kind of chopping around 94, 9,500. That seems to be like the new normal for Bitcoin. I don't know what to tell you about that. Just hold. I'm not a trader. And all the stuff I publish about Bitcoin buying, that's me. That's my money. I'm sharing it with you because I've just gotten tired of kind of the dark kind of feeling about Bitcoin. Like everyone's anonymous, everyone's hiding, everyone's afraid to talk about Bitcoin. And until we come out as professional or real people buying Bitcoin, holding it as an asset, challenging banks to actually allow us to use it on our P&L statements, allow us to prove provenance, sell Bitcoin, sell crypto, move that fiat onto an on-ramp back to a bank and actually buy properties without, going through bullshit, then that's what I'm trying to do. So I'm going to push forward, be an adult that owns Bitcoin, show you I own Bitcoin, just like I have been doing. Look, I appreciate it. I'll be back tomorrow, hopefully. And this was a lot of fun. Talk soon.